What's happening, everybody? Mike Ferrossi here, and your refinances just got more expensive. That's right. Refinances are now more expensive to the tune of 0.5 percentage point on all conventional refis, thanks to Fannie Mae and Freddie Mac, who just slapped us with this a couple of days ago out of nowhere.
Sometimes you have to slap them in the face.
Now, I don't actually know what this is, but they're calling it an adverse market refinance fee. So I'm not so sure what's adverse about this market that we're in, because obviously the companies that have been able to weather the early COVID storm have thrived and flourished. There are more loans being done now than almost ever before. Rates are at record lows. It's never been a better time to purchase a home or refinance. And this is an adverse market? I'm not sure how it's adverse for Fannie Mae and Freddie Mac. Maybe this is a play. It could be a way to build more capital with the eyes set on getting out of government conservatorship.
I want my money. You pay you.
Or, who knows? Fannie and Freddie could have just got together for a little powwow one day. A socially distanced powwow, where they were wearing masks and being safe, hanging out on LinkedIn, scrolling through the feeds, and seeing what? What do we see these days? That's right. Company record after company record after company record, because tons of lenders are funding way more volume than they ever have in company history. And it's good to advertise these things, but maybe Fannie and Freddie just, got a little bit tired of seeing it all, and they wanted a piece of the pie too. So not only did they say, guys, 50 basis points on all refinances, but you know what? That's going to be effective right meow.
I could have sworn you said meow.
Yep, it's basically effective immediately.
You stop laughing right now.
And this is the most out of character thing for these organizations through this entire announcement. They usually give so much advance notice that you can forget about changes before they happen because you received it so long ago. But not this time. These announcements are dated August 12th, and these changes are effective on September 1st. But that September 1st deadline, it's for settlement dates. This isn't a funding date, an application date, a lock date, a dock out date. No, these loans need to be into mortgage-backed securities by September 1st. Well, if you didn't know, the vast majority of lenders, when they fund loans, they're not selling them straight into mortgage-backed securities. They're selling them to closed loan aggregators on the secondary market. And those closed loan aggregators may sell them to yet another larger closed loan aggregator, or they are the ones who get them into those mortgage-backed securities. Well, for a loan to fund and get sold and delivered and purchased and then sold or issued into a mortgage-backed security again, that takes some time. And most of the time, a lot longer than a couple of weeks. So what have we seen? We've seen lenders industry-wide add that extra 0.5 point hit for all refinances on conventional loans to their rate sheet effective immediately. Because starting now, it doesn't matter when that loan funds. By the time it gets into a mortgage-backed security, it's gonna be after September 1st, so it's gonna be hit with that 0.5 point, regardless of whether the loan was locked before this memo was issued or not. Existing locks. That's where company policy comes into play. How are companies handling existing locks? Well, the results are kind of all across the board. There are companies who are just slapping everybody with that 0.5 point fee, whether they were locked or not. There are companies who are still analyzing and seeing what they need to do, possibly haven't even made their announcement yet. AFN, here's what AFN's gonna do. AFN's gonna eat that 0.5 point. Yeah, our borrowers, they shouldn't have to pay for that. AFN's gonna cover that 0.5 point on all currently locked loans as long as that loan funds by the lock expiration date. Adverse market refinance fee, huh, Fannie and Freddie? Thanks a lot. This is gonna cost lenders a lot of money, and it's gonna cost borrowers a lot more on the go forward. What are your thoughts? I'd love to hear what you think adverse market refinance fee actually means. Are they just trying to get a piece of the pie with all this record volume going on? Are there actually adverse things that have happened to Fannie and Freddie's business because of COVID? Is this a capital building play so they can get out of government conservatorship a little bit quicker? I'm not sure, but your guess is as good as mine. The one thing I do know is at face value, it all looks a little bit suspicious and a lot of it opportunistic. Thanks for watching, guys. Again, Mike Ferrossi. I appreciate you being here, and we'll see you next time.